strong. Okay, Narissa. So lots of troubles at Toyota. So that's why I guess people are looking at alternatives. How do you benefit from Toyota's woes, right? And you're looking more closely at Hyundai Motors.
Yes, Hyundai has been gaining market share in the U.S. as a result of Toyota's problems, and so we have added to that position recently. And of course, this yesterday's news was unfortunate that Hyundai's new launch in its new model Sonata has to be recalled due to some problems. And this is coming on the heels of Toyota. And but the good news is only 1,300 cars have been sold of that model. And I think the problem is insignificant because the problem seems to be with a door latch, which is, I think,
very different from an accelerator throttle electronics problem, maybe.
It is not, going to cause any injury.
Well, what about valuations at this point? Because I spoke recently to someone, Koji Endo, who used to be a credit analyst, an equities analyst specializing on car shares, and he says Toyota is a buy, considering it's down near 3,000 yen.
Yes, well, I do not invest in Japan, so I'm no expert on Japanese equity markets, but yes, definitely, the stock has corrected 25%.
Yes.
In a month since the announcement of recalls. So actually it's stabilizing.
Yeah, but Hyundai is pretty cheap, isn't it? Look at those price to earnings ratios.
Absolutely so attractive in terms of valuation and growth because we're seeing market share growth every month.
Right. Fantastic. There you go. Now, what about the auto space? Talk about the Chinese automakers. Since you don't cover Japan, I guess we have to go elsewhere. Yes. What about Great Wall Motor? You continue to like this stock,
yes,
is that right?
It has been my top pick since a year ago. We like it because it is in the area which is benefiting from government policy, subsidies, because they produce cars that are less than 1.6 liter and that are very, very affordable. So they not only benefit from government policy, but also from a rising the rising affluence.
Did you say they make cars below 1.6 liters? Is that right?
They are in the
But don't they make SUVs? They're known for their SUVs,
but
their Jeeps.
True, but passenger cars still account for almost 80% of sales in China of total vehicle sales.
Okay. Well, Narissa, stick around. We're going to talk more on stocks and stock plays across the Asia Pac. We're talking to when we went to break, we were talking about some Chinese companies that you advise buying into, and we just talked about Hong Kong and China and the property sector there on the mainland. Some are calling it a bubble, but you're saying that there are still some investment opportunities, right?
Property is all about location.
Yes.
And I think in some of the major cities, such as Beijing and Shanghai, we are seeing pockets of overheating. And obviously the government is anxious to have some control over forming of bubbles. As well, actually history has the government has a record of trying to burst asset bubbles. But then, if you look at the performance of the equity market in the last 3 months, the Hang Seng has corrected 20%,
yes.
H-shares 25%, but the property sector, mainland Chinese companies, have corrected 30 to 40%.
So is this a buying opportunity then?
Well, I'm certainly seeing valuation.
Yeah. Well, what makes you so sure that these property companies will come back in terms of valuations, considering we're seeing this clampdown, this tightening process taking place here in Hong Kong and on the mainland?
Well, I don't think it will be, the government will actually prick the bubble too much so that we see the collapse in property prices, because I think at the stage when the global economic recovery is still in a nascent state, and you don't want to stifle growth, because China needs the growth. and exports are not recovering. With global recovery, very weak at this point. So
let me just ask you why China overseas land is your top pick in this sector, because you can pick from many others, right?
I think
long-term real estate,
there is,
poly.
well, as you said, there are risks, in this sector. Government control and credit tightening are just some of them. So I think, I advise caution when investing in this sector. And that's why one needs to actually invest in a large developer with national exposure. So diversified risks,
and this is
and
low
very
leverage.
Financially sound.
Yeah, low leverage for this particular company.
That's
In fact, I think among the ones that we track on the Bloomberg, it has the lowest debt to equity ratio among China's biggest developers.
Yes.
Now, we have about a minute and a half left here, Narissa, so I just want to quickly get into your top pick, I guess your top holding, because we talked about Comba Telecom the last time you were on. It's still your top pick at this point. Is this a good defensive play?
It's a very defensive industry, especially in China, where the mobile penetration rate is only currently 55% and growing very fast. But we prefer exposure in telecom equipment makers, and the segment that Comba is in the wireless coverage enhancement systems, and they are the leader.
Narissa, when people look at the telecom sector, they look at the yields, which is always so attractive for investors to get. But
no, not for equipment makers. It's seeing very strong growth. Actually, yesterday, the company actually made profits alert. 2009 earnings are at least double.
At least doubled?
Yes.
Oh, wow.
But this is the second year that they have done that. Last year was another profit.
Narissa, thank you for dropping by. Narissa Lee of IVM Asia Opportunities. We're going to break here.